Awesome. Yeah, so as you guys know, Karan unfortunately couldn't make it, so I'm going to be substituting for him in teaching you guys something here. Um, if I'm not mistaken, you guys were left off at key levels, right? You guys wanted to learn how to plot some support and resistance. Okay, yeah. So let's do that for today. In this lesson, I'm just gonna go over how you can plot key levels. And this is one of the methods, this is one of the methods most traders use and what I like to use recently. Essentially, key levels are support and resistance areas on multiple time frames. So we do something called top-down analysis. Now, top-down analysis is essentially when you find a key level starting from usually the weekly chart is where I like to start. You find these support and resistance areas at the weekly chart, and then you work your way down to the daily chart, the 4-hour chart, the hourly chart, sometimes the 15-minute chart, and even the intraday chart. And the reason why we do this is because when we find these support and resistance areas, we know exactly, usually around these areas is where algorithms have areas of significance. So this is usually where you see like patterns form, such as bear flags, bull flags, double tops, head and shoulder stops, all of these different patterns that you see unfolding on a day-to-day basis is usually found around a key level. So we need to pay attention to these areas, and usually when these patterns form around those areas, they actually offer high probability trades. So we use them as entries and as exits. It's as simple as that. Now we could talk about this later, but we can combine the average true range, the ATR of a stock, right? And we combine and see what key levels are important for that day. So for example, in the most volatile scenario, you're gonna have a 100-point swing, and that's like, when you have CPI data come out at 5:30 a.m. PST, right? You're not gonna be looking for example, if we're at 5100, 5160 here, you're not gonna be looking at a key level all the way up here at 5300, right? It's just way too far away. It doesn't fall within the stock's ATR, so you're not going to pay attention for that for the day. For example, if an average day we move 60 points, right? So from here, we could use our info line, for example. So yeah, this is like 60 points. Let's say this is the average true range, right? So what falls within, let's say if we open here on Monday, what would fall in this area? We see like furthest key level we have is at 52.15, right? And this is actually an intraday level, so we're actually going to delete that unless it shows up later on. So really, the only key level that we have the closest here is at 52.09. So yeah, you can hold it to 52.34, but obviously we need to have a better than average day. So typically for the upside, we'd only be looking for 52.09. And for the downside here, right, we'd only work all the way down to 51.15. That's like the maximum, or like on an average day, what we'd expect to make, or we'd expect to move. So let's say if we start dropping on Monday here, and we start forming a bear flag, double top bear flag around 51.33. We know that we have room to move all the way down to 51.16, and then we could use these areas to structure a trade and see if there's enough risk to reward to make it worth our money to risk, right? And if it's less than a 2-hour trade, then we simply reject it. And yeah, we know exactly where we could take our profits. And let's say if we have an area to enter here, we know that we could take a trim at 51.33 and our final profit target being at 51.16. So we know exactly how we could hold it, right? We know exactly where price is likely to bounce. I have some key levels drawn here. They're not that great. They're pretty old, so it's not the best right now. But you can see that this is typically in this trading range. It acted as a resistance and as a support over here. And yeah, back here is just we see all these different patterns that form here. For example, this is a trade I took back on last Friday. This is a wedge pattern forming in the morning, See, notice how we broke out at this key level and at the VWAP, right? Multiple confluence factors. We even had a double bottom pullback here. This was multiple chances to enter this trade. And where did price end up bouncing off? We bounced off, you know, you could take a trim over here. We bounced off the top key level here. We formed a support, right? Support resistance flip here, multiple confluence happening here. And yeah, you can see how these key levels can help you structure trades and manage your risk. That's really all it's about. So yeah, let's go over how to plot these levels. So this is one way to do it, is top-down analysis, as I mentioned before. I gotta speed up here because I know we don't have that much time. So screw it. I'm just gonna remove everything over here and I'm just gonna redo it. And yeah, let's show you how it goes down. So I like to start on the weekly chart. The weekly chart is the highest time. You know, you could also do a monthly chart, but I just typically like to do a weekly chart. And when we're plotting these levels, one thing you have to keep in mind is, if you think about it, yeah, we could start plotting support and resistance, you know, all the way back here, you know, places in the past. But you don't want to waste your time. You want to be very efficient with your time, correct? And because of that, like, if you think about it, the worst case scenario is we have 100-point swings on a day-to-day basis. Even in a weekly basis, like this was a pretty volatile week, right? And we moved 120 points. So with that in mind, it doesn't make sense to plot a level all the way down here when in a week, maybe we'd only get down to 5025, worst case scenario. Okay, maybe we could go a little further, you never know. You know, Iran just attacked Israel. So yeah, we could see a crash happen maybe if World War III happens. You never know, right? But typically, you don't want to waste your time plotting levels all the way back here in the past when we're only probably going to move this much within the week anyway. So I'm not going to go over these levels back here. And we see that we're in this very tight bull channel. So there's not a lot of levels that we could plot on a weekly. Like if we were at this price range, obviously the software helps me see some obvious levels here. This would obviously be SR level here, right? Because we have a touch back here and a touch back here, touch back here, touch back here. This is a very high quality level. But I'm not going to have it on my chart just because of the fact that we're not in this price range and I don't want to clutter it up any further. So I'm gonna mark an area high and an area low. So an obvious one we have here is this one, and I have a preset for every key level. For example, I have the weekly over here, and for the weekly, in this case I mark it as a pretty thick yellow line. So this is my weekly level. This will signify if I'm an intraday time frame and I see this level, I know this level will probably be respected or it'll act as a magnet. So, for example, if we have on a smaller time frame, let's say we have a bull flag over here, right? Would I take that bull flag if I know it's coming into a weekly level, a weekly resistance? Probably not, right? Probably not. Because what are the chances that we break through that weekly level? Chances are we have some limit order sellers in that area, right? Or algorithms see that it's a weekly level, it'll get respected more. So when we see a bull flag close nearby, the risk to reward is probably not worth it to take. Now, if we see an intraday level, like let's say a 15-minute level, forming a bull flag, you know, under it, you know, we could probably take that because the chances are we'd probably break right through it if there's enough volume coming in. So honestly, I don't see any other key levels to the downside, right? Maybe if we have a green candle forming next week, this would become a level right here. That will tell me that we held back here and back here. Until that happens, we're just going to keep it over here. And we're going to move down to the daily. So for the daily chart, one thing I want to show you guys for future contracts is you notice I have this setting turned on. Adjust for contract changes. And what you notice here is like if I turn that off, this is what most people see. This is what most people have up. We have like contract change. For example, we had one here in March. And before we had one here in December. You see how there's a gap in price? Over here we have another gap in price when there's a contract change. That's because when the contract changes, the price of the future contract is different. And what TradingView offers here is this button. So if you press it here, you notice that it just it adjusts it. It adjusts the past price to jump up to the latest contract, and that's very helpful for plotting dynamite levels that are important, right? So that's something I'd recommend that you turn on if you're on the futures. And this is actually how SPY would look like, you know, or SPX. So that's why it's. I heard some people have it turned off. Some people still plot levels with it turned off, and you do see some areas still being respected. That's because algorithms might be using this as well. But just the fact that we have other algorithms using it with adjusted, and also we have the SPY. You know, if we type in SPY here, we notice it looks exactly the same, right? We have like this bull channel here. If we go back to ES, same thing. We have that cleaner looking bull channel because it's, you know, future contracts are accurate. If we turn that off, we see a big gap here. I don't want that, right? Because with this gap, I can plot a level here. If you go to SPY, is that a level? No, it's a midpoint of a range, right? Like this would not make sense as a level. Not in the context of this, so we're not going to keep that. So anyway, let's go continue on plotting levels. I digress. So this is an example of an area here. We see that here, rejection, rejection. We're going to plot one there. Right? And now for my preset here, I have a thinner line to show that it's a daily level. And you know, when we go in a smaller time frame, we could adjust this even better. So I think I like it there. Ooh, let me adjust it. There we go. So this is a good level here. We see a touch here, a touch here, a touch here. I want to be very careful. Some people, they just start plotting, you know, they start just plotting like this, like this. No, 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 no. We want to see clean levels that are clearly tested, right? So I honestly, I think that's it on the daily chart. Maybe this one right here. And this is already going way too far down, but I'm just gonna plot it anyway. Right? We have a bounce here, rejection here, and that's honestly good enough. So go down to the 4 hour. I'm just gonna turn off this software here. So yeah, this thing I have up is just like it plots support and resistance areas, like obvious ones. You know, it could help you, but for now I'm gonna turn it off just so we don't have that much noise on the chart. And yeah, we could use we can now adjust some of our levels here. So actually, I actually like this because we just rejected this area here. Yep, this looks good. Now on the 4 hour chart, you know, we're in a chop right now. So we have to be very careful on what levels we accept. So this one is a pretty good one. And I'm gonna just change this to my 4 hour preset here, which is a dotted line. You guys wanna know how to do presets? So basically, also one thing you notice here is a great thing about these templates. So for example, when I go on this line, this is visible on the higher time frame charts, right? The 4 hour thing we just plotted here, it's not visible on the daily and the weekly chart. So if I go out to the daily chart, right, it's not visible. It's not there. So when I'm on a higher time frame and I'm looking at price action, I'm able to have a cleaner looking chart. And again, the way you do that is, so we click on the setting here on the level, right? And the visibility, so we have style, text, coordinates, and the last one, the visibility one, you want to set it to only be visible on seconds, minutes, and hours, not on days and weeks. And when you're on the smaller time frame, you're going to be able to see all of these levels, but we're going to have it set up in such a way that it's not going to clutter our chart. Okay? Yeah, so this is like, again, this is the range of the levels we have plotted. So I'm only interested in plotting ranges over here. Obviously, we're not going to go all the way down here and start plotting some random levels here, because we're not going to get there within the week. Heck, probably not even within the month, with how price action has been lately. Yeah. Okay, so let's continue here. I see another one, right? So we have some couple of rejections here, multiple touches, rejection here, rejection here, rejection here, rejection here, rejection here, rejection here, right? This right here is a pretty good level. I'm going to adjust it. So again, these are basically zones. So you just want to find the best fit line here. Yeah, so it's very tempting. Actually, this one is pretty good. We have rejection here, 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 right? And this one, we have multiple touches in the past there. Cool, right? Right here, here, here. Good. Yeah, why not? For this area, I might leave it. I might leave it up for the smaller time frame for more precision. So I think we're done on the 4-hour chart. Let's head over to maybe the hourly. And yeah, we could just start adjusting these levels a little bit if there's anything problem with it. So that looks fine. Okay. I think it's fine. So let's go start back from here and plot some of these areas. So we clearly have an SR level here. Let me just switch this to the 1 hour. Right, we have touches back here, here, here. Another thing that gives us a pretty good confirmation of SR is if you see the volume profile here. What do you notice? The levels that we have plotted that was in the past, we see clear either high volume nodes, or the beginning of a high volume node. So wherever there's a low volume node, the beginning of these areas. So volume profile can actually help us identify some key levels. So for example, look at the start of this distribution level here. If I plot a level here, will that look good? Well, look at this. Rejection here. Rejection here. So yeah. Very clean tool. We just have to adjust it a little bit. Move it a bit down. Yeah, pretty clean level. So we can use the volume profile to help with it, and it's higher quality, right? It's confirmed by volume. Again, I plot one here, rejection here, 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 SR flip, right? Now there's some people that like to go fast, but I like to go slow. I like to go slow for the fact that, one, I'm able to absorb the numbers here. I like to absorb the numbers that I see. Like, have I seen these numbers before? Have I seen? But mind you, once you're living and breathing on the chart, you're gonna dream about these levels. You're gonna dream about the consolidation that happened at, for example, 164. These are all. It's insane. Like, your subconscious mind picks up on all this, and once you're living and breathing on the chart, you want to get to a point where you know there's a level there without even having anything plotted. Because I trade on a naked chart. I trade on black and white naked chart. I have this on the side. I have this whole setup on the side, right? Look at that. These are all levels that we had before in the chart, right? You saw some exact levels. And we want a smaller time frame. We see how it just gives you clean entries and exit areas. So that's pretty cool. And I think we're gonna do one more right here. Yeah. This is a clear support resistance areas here, here, here. So yeah. No. Okay, I'm gonna leave the rest up for the smaller time frame. Now it's time to go on the 15-minute time frame. And we clean up some of these areas if we see any problem with it. Honestly, I think that's fine. Yep, that's fine. Okay. I think we're set. So let's see. This one might be a level here. Right here. Yeah. This one right here. I'm going to change this to the 15-minute. And adjust it a little bit. Yeah, just like that. Right here. So we have rejection here, 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 right? So just take your time with it. And whenever you plot something, you got to note 5220. 5220. Does these sound like good names? Like nice round numbers. And you'll see them be close to round numbers. So it's just the way it works psychologically. 195. They're all close to some sort of round number. 5271 is close to 5270. 285, 300, right? It's a big round number. So 300 would act as a resistance either way. So yeah. And yeah, I guess I'll plot this one right here. And this one. You can be more generous with these gray levels because or the 15-minute levels because they're more easily broken through. But like when you see a bunch of chop here, you got to be more careful. You got to be more careful with how you plot them. So this is a clear level right here, right? Look at all that. Look at all those touches right here, here, here. Also a low volume node on the volume profile. Clean. Use the volume profile to help you. Like, is there a level here at this low volume node? Kind of. Not high quality enough in my opinion. So if let's say we have a bear flag coming here, unless there's a big catalyst happening, I'd probably not take it. You know, we have this whole area where chop happened. It's not the best in my opinion. So we're gonna leave that area, these areas to be, unless there's like unless there's gonna be like some intraday price action in a pre-market. That's where you could get some extra levels for information. But only one I see is this one here, over here, like right here. Even this one, yeah, this one is fine. You just want to be very selective with this. Only reason I'm doing this is there's like SR flips over here and lots of congestion, like a very tight congestion in these areas. So yeah. Also the beginning of the volume node as well. I see. Okay, let's move down to this area where it's more interesting. So I think I like this one right here. Right? Nice. This one's a good one. Bunch of SR flips here. This is support here, resistance, resistance, resistance. Nice. Yeah, this one. This is a good one. Like, yeah, this one only has a lot of congestion over here. Kind of active one like back here, but in this area, if we wait for the profile to update, you'll see it's a clear, look at that, clear sort of this volume gate here. Cool. So I think we're done for the levels. This is how you plot very high quality levels. Very good for trading. And let's look at this. You may think this is cluttered, right? You may think this is cluttered, but once we go on a smaller time frame on the 2-minute chart, look how clean it is. Look how these get respected, right? Right? We have support in the pre-market, right? I believe we had a level over here previously, which I traded off this Friday. So even this right here, right? And you can see how so these are all 4-hour levels, right? So with 4-hour levels, anything above 4 hours, you should give it more room. You should treat them more as zones. So you see over here, this whole area was a support and resistance. So this is on the 2-minute chart. On the 2-minute chart, you're gonna see, you know, we're gonna be going over it a bunch. We're gonna be going over it, or we're gonna undershoot it, overshoot it. So it kind of gives you an idea. Hourly is a little bit more precise, which you see here, right? Again, look at the smaller levels here. Way more precise, clear touches, but they're also very easy to break through if there's enough volume. Nice. So you see how these levels can help you trade. You know, we have clear bounce levels, clear bull flags, bear flags, right? See, for example, here we have this nice bear flag, at a daily level here, right? Also the open of the day and the future market here. That's a double confluence here. I believe I even traded this one. This is the double top bear flag that happened. Yeah, this is the big volatile move where I trailed my stops as we broke down here. Yeah, I had the exact same key levels, very similar key levels. So over time, you'll just have the same levels as every other good trader on their chart, right? So like, look, this probably took like half an hour. You know, I believe we've been talking for half an hour here. So yeah, it doesn't take much time and to plot these dynamite levels here, right? We have a clear double top rejection here at the bear flag, rejecting VWAP, rejecting at the EMA, right? So yeah, this is a clean way to enter here. Like, you can even enter here as we failed a second time, you know, high double top bear flag. And as we just start breaking down here, you could take an aggressive entry here, right? Or here you'd see it come up for the first time. You'll see it reject here the second time, and you could just take the break of the trend line here for higher probability short. Right? Look at here. This, I also had a key level here. If you actually go on my Instagram, for example, Zoltan Trades, you'll see this exact trade I broke down. Yeah, just look for the headline of April 9. This is another very clean trade. You see all these top wicks happening in this area, right? We can't get above this resistance. It's a head and shoulder stop, left shoulder, head, right shoulder. Clean sell signal bar right around here. Take a short either under the bar or at the close of the bar. Very nice high probability trade to the downside. Trim at the key level here. Bear flag. Trim, right? With these volatile swings, you could trail stop behind the most recent volatile candle to capture the volatility. Because right here, this was just a nice final flag that happened here, right before we found support. Found support at the 4-hour level and grinded all the way back up over here, right? Nice. So yeah, you guys have I guess there's not much to ask other than I saw a couple of you guys wanting to know how to make these templates for the levels. So I'll just show you how to do that right now. So let's see. So you go on settings. Yeah, so you go on settings, you click on template. For example, for the intraday level, let's say, I don't know. Let's say I just want to mark this level here. You know, this is like a double top rejection here. Obviously, I'm not going to keep this on my chart. But let's say I want to make this, I don't know, purple. Okay, I'll make it pink. I'll make this pink, and let's say I want to call this the 2-minute chart level. So you click on settings, go on template, or hold on. Yeah, save as over here. You save as, and let's say I call this 2-minute. Delete, just to mark it for myself. And now it's saved. And now it's only visible on the minute chart, right? And the second chart. So if we go scroll out here, let's go on the 15-minute time frame here. Where is it? Oh, oh, it's an hourly chart, that's why. Go on a 15-minute chart, and you'll see here. And you'll see how clean these charts will be. Like, again, I was on the hourly chart before, so I didn't see it. I only see the 4-hour levels. I see the hourly levels, and I see the weekly, daily levels, right? If I go to the 4-hour chart, you can set it up to only be visible for 4-hour levels and daily levels and weekly levels. So you're not going to see all that crap that we have on a smaller time frame. Right? Let's say I make this visible on the daily chart, right? Hourly chart. Now this will be visible on, let's say if we go on a daily time frame here, right? You'll see it there. So yeah, this is how you want to adjust your levels, or for the templates. So I'm just gonna, yeah, you'll see how I have all of these over here. You know, I have the 1-minute level. Wait, no, I don't even think I have. Yeah, sometimes for the intraday levels, like when you see the red lines, that's when I plot. the intraday. But I guess I don't even have a template for that. I just kind of jot it down and delete it later. But yeah, so I think that will be enough for today. I think we're overstepping by a couple minutes here, but these are very great ways to plot these levels. And again, I just want to stress the importance of using the ATR. For example, look at this day. On this day, we moved this much, right? Now, if you transfer over that to this day, we placed a high at this area, right? We formed the high here. So an average day, we move however long this is. Let me just use the info line to give you a better perspective. We moved 75 points today, right? This was a pretty volatile day. And when we formed this high, let's say, as we're playing the downside here, we see this head and shoulder stop, left shoulder head, right shoulder at the key level, breaking down, right? We place that at this area right here, and we know that for all of these key levels, all the way up to 5155, we're safe. So we could take trims all the way down to 5155 if the trend stays intact, right? So we're not going to hold down to 5134 because the average true range doesn't reach there. We're going to stay safe and be within our key levels. And if you would have done that, then you could have safely trailed all the way down and captured a 75-point move to the downside. This is how you structure trades and how to have the best entries and exits, all right? Okay. Yeah, I'm going to get kicked out here. So I hope you guys learned something today. And yeah, again, this was like I was put on the spot, so I don't know, I'm not that great at explaining stuff on the spot. But if you enjoyed, yeah, just hope you guys found it helpful. Right, no problem. Right, take care, everyone. Yeah, I'll probably be teaching next Saturday. Yeah, we'll have to I'll have to talk with Carlos and we'll see. Yeah, I mean, I'll be in the chat with you guys anyway, so yeah, just shoot me a question, shoot me a DM, and let me know.